Hey everyone, this is Logan Hertz with Hazeltine LLC. I am still recovering from a pretty major surgery. I'm still a little bit loopy, still on some painkillers. So I guess if I say anything wrong, that'll be my excuse. But I didn't want to go too long without making a video. I have with me my colleague Peter Nelson of Nelson Insurance Advisors. Peter, how you doing?
Living the dream, Logan, living the dream.
So for this series, I wanted to address an article that a prospect sent me. I had a prospect who kind of is on the fence about infinite banking and sent me this article that kind of is against infinite banking. Shocking, I know, an article that's against infinite banking. I mean, it's just shocking. I've never heard of such a thing, but apparently there are people who are against the infinite banking concept. So I'm just going to share the article, start reading it, and I have not really gone through this article in advance. And we'll just go through it and see what it says and what happens. And I'll say that usually, when people criticize the infinite banking concept, it ends up being a straw man argument. I don't think intentionally, just because it's usually based on some fundamental misunderstanding of what the infinite banking concept is. And so in my practice, I usually don't spend a whole lot of time answering objections because what I do is I just educate people on the infinite banking concept. And once they truly grasp what it is, all of these objections fall away because they're based on a fundamental misunderstanding of what the infinite banking concept actually is. So once we properly define it and understand it, which is not easy, it's not an easy concept to understand, then a lot of these supposed objections just fall away on their own. Okay, so let me share my screen and we'll start going through this article. Okay. All right. Infinite banking concept without life insurance. This is from The Wealthy Accountant. I've never heard of them before. I don't know anything about them. But I actually have to say, I do like that title, Infinite Banking Concept Without Life Insurance. I actually like the title. The infinite banking concept, strictly speaking, has nothing to do with life insurance. It's about banking. It's about becoming your own banker. It is a concept that stands on its own. And then specially designed whole life insurance policies happen to be what I believe to be the ideal vehicle for doing it. Okay. But the concept exists on its own. So if the point of the title of the article is to say that you can become your own banker without life insurance, well, that's true. There are potentially other ways you could do this. There are broader principles at play here. So I like the title. Okay. When people have infinite banking explained to them for the first time, it seems like a magical and risk-free way to grow wealth. The idea of replacing the hated bank with borrowing from yourself makes so much more sense. But it does require replacing the hated bank for the hated insurance company. Usually, the biggest adherents of infinite banking are those getting paid to be a big fan. Of course, insurance companies and their agents love the concept. They invented the sales pitch to sell more whole life insurance. But does the sales pitch live up to real world experience? Okay, let me stop here. That's completely wrong. Insurance companies do not like the infinite banking concept. Okay, I will include in the description below a link to MassMutual, one of the biggest mutually held life insurance companies out there, and they have forbidden their agents to talk about the infinite banking concept. Basically, say if you talk about it, you're fired. That's how much we hate it, and they're not the only ones. If you look at the life insurance companies, I'm not aware of a single one that talks about the infinite banking concept. Go look at the websites for Guardian, New York Life, Northwestern Mutual, Mass Mutual, Penn Mutual, One America, Lafayette Life. Go right on down the line. Look at all their websites. Show me one of them that's talking about the infinite banking concept and telling you how great it is. They're not. So that's flat out false. At best, the insurance companies are ambivalent when it comes to the infinite banking concept. They are insurance companies. They provide whole life insurance as a product and they provide the ways to design it.
Yeah.
Are you aware, Peter, of any insurance carrier out there that's like promoting infinite banking?
Not promoting it. And of course, we know there's some companies that are more, let's just say friendly to it, but promoting
Right,
it, no.
right. So no, they says they invented the sales pitch. So they're saying insurance companies and their agents invented the sales pitch. No, they didn't invent it. No, it didn't come from the insurance carriers. And it's not a sales pitch. It's its own thing. It's not a sales pitch. It was discovered, not invented, discovered by Nelson Nash. And I think at one point he might have been an insurance agent, but for most of his life, he was not. He's educating people on the infinite banking concept, but he's not actually writing any life insurance. He wrote the book on it. So no, it's not a sales pitch for whole life insurance. So he's kind of contradicting what the title said. The title seemed to indicate that you can do infinite banking without life insurance. But now it's kind of saying that infinite banking is a sales pitch for whole life insurance when it's not. It has nothing to do with life insurance whatsoever. And no, the insurance companies and their agents did not invent it. That's not where it came from. So this is contradicted by the evidence. And I'll include a link in the description below to the MassMutual memo telling their agents, you will not discuss the infinite banking concept.
Yeah.
So the insurance carriers are at best maybe ambivalent to it.
Right. They would much prefer if the cash value sat there in the general account and they were making interest on it. So, death benefit, they can see where death benefit, they're going to pay out. They know actuarial when a death benefit's going to pay out, right? That's the way what they want. So to say that the insurance company wants to loan out a whole pile of money, that's just not true. I'm sorry.
Right. And notice how they always have to throw out the biggest adherents of infinite banking are those getting paid to be a big fan. This is always what they come back to. This is ridiculous scarcity mentality that it's evil to make money. Like, how dare you make money? It's like, yeah, I'm putting my money where my mouth is. I believe in the infinite banking concept. My wallet is in alignment with my beliefs. I am a true believer, and I am trying to make as much money as I possibly can, and I make absolutely no apologies for it, because the only way you make a lot of money is by adding a lot of value. Okay. And the people who are criticizing infinite banking, they're making a lot of money hawking, competing. Like, come on. It's not like you've got objective observers on one side criticizing it, and then life insurance agents on the other side attacking it. Come on.
By the way, Logan, so you just mentioned you had a surgery done. Did you beat up the surgeon for what they charged for the operation?
Yeah, how dare him? How dare him make money? Doesn't he know he's supposed to work for free? That guy, he tricked me into getting a surgery because he just wanted to make money off of me, right?
Right. And did you pick the lowest cost surgeon, by the way?
No, I picked the best. I want the best.
Of course. But see, this whole thing is just absolutely, like you said, it's ridiculous.
Yeah. And so again, it's projection, right? It's projection. This guy can't possibly get his head around the idea that someone might actually believe in something. And then, like, I believed in the infinite banking concept for multiple years, and I decided I believed in it so much that I wanted to turn it into a business, right? So I suppose that makes me some kind of charlatan, right? Because I'm promoting a product I believe in, and I'm making money from a product I believe in because I add value to my clients, right?
You're an evil capitalist. How dare you?
Yeah, just totally evil for people to make money. But selling mutual funds and making money that way, that's fine.
Right.
Selling index funds and making money that way, no problem with that. That's totally fine. 401ks, all the standard Wall Street instruments where they make obscene amounts of money, bringing assets under management, nothing wrong with that. That's totally fine, right? It's only when a life insurance agent makes a commission from protecting widows and orphans, that guy is evil. That guy is evil.
Yeah, because don't even need to say any more on it.
Okay, yeah. But they always have to go there. It always has to be a moral question. It can't be, let's have a professional discussion and an honest disagreement about what is the best financial strategy. No, it can't be that. It has to be, you guys are a bunch of evildoers, and I'm going to call you names and accuse you of chasing after money, right? Whereas I, of course, am Mother Teresa. I am not here to make any money. I'm charitable, and I'm just here to do the right thing. Please, okay, we're all here to make money. By the way, if you're going to work with a financial advisor, do you want to work with someone who's good at making money or who is not good at making money? Right? Like, if I find out my life insurance agent makes a lot of money, that makes me feel comfortable. I'm like, I want to work with someone who's good at making money. That's his job, to make me money, right? Okay.
Do you think these people maybe should be spending more time actually trying to help people instead of trying to bashing other stuff?
Yeah. It's always to them, everything is a win-lose proposition to them, right? It's always win-lose to them. Whereas we know good business is creating win-win scenarios. When I help someone put a good whole life insurance policy in place, it's win-win. Win-win-win. The insurance company wins, the insured wins, the agent wins, the beneficiaries win, everyone who's protected by that policy
The
wins.
economy wins, by the way. Let's talk about that. We don't talk about, I think, nearly enough. The economy wins. The United States economy wins when a large death benefit, heaven forbid, is paid out, right?
Yeah, you want to talk about a win-lose proposition. How about putting your money in the market? There are absolutely winners and losers when you start chasing the S&P 500. If the S&P 500 goes down, you lose. You lose. And your financial advisor doesn't have to give you back the money, the fees he charged you for taking assets under management, right? Even if it's an index fund, someone's charging fees, right? There are absolutely winners and losers there. But with whole life insurance, everybody can be a winner.
I sleep a good with mine. I know it always goes up.
Yeah, that's right. I've never had my clients call me complaining that their cash value is down.
By the way, I just got back, Logan, from the professionals forum, and one thing that I heard Jim Ruda and George Sigurdsson say, and I truly it's an amazing line. Whole life insurance is the greatest non-managed asset ever created. Think about that for a second. Right? I like to say that it's the greatest, savings account or vehicle ever developed by the human mind. But I just love that the whole life is the greatest non-managed asset ever created. And it's so true, right? So true.
Yeah, there are no management fees in whole life insurance. No management fees.
And it always goes up.
Yeah. Rules of math don't need to be managed. The rules of actuarial math do not need to be managed by anyone.
You just go out there, make more money, put more into that, what I jokingly call the tin can. And amazingly, it always goes up. So anyways.
Okay. In this article, we will first do the math on infinite banking, the bank with yourself philosophy. Because fans of infinite banking might claim I'm being biased, I will use screenshots from a proponent's video and link the entire video at the end of this article. Okay, let me stop there. He's going to take one proponent's video and act like that is the gospel truth on infinite banking. Come on, come on. I am sure that we'll get there. So I don't know, maybe he's being fair, but you can't post one video on infinite banking and say, see, I'm being fair. Look, I can cherry pick any number of videos on any number of subjects which say things that are asinine. Okay. You can't pick one video and share it and be like, oh, see, I'm being fair. Have you read Becoming Your Own Banker by Nelson Nash? Like, have you actually done the work? Okay. Probably
Good
not.
book, by the way.
Probably not. Yeah.
I'm
Do
always-
the math. Well, he says do the math. Wait a minute. Infinite banking is a philosophy. It has nothing to do with math. You can do the math when you get to execution of the infinite banking concept. But the infinite banking concept per se has nothing to do with numbers or math. It's a philosophy. It's you becoming your own banker. The question is, do you want to have control over your capital, or do you want somebody else to have control over your capital? That's the question. That has nothing to do with math. It's about control. So when he says do the math as if that's the decider, no, you're not understanding what the infinite banking concept is, right? So I'm waiting for him to define what the infinite banking concept is. He probably won't. Like most people will probably jump straight into a bunch of talking points written by Wall Street about why you shouldn't have whole life insurance, never even bothering to define what the infinite banking concept is. So no, numbers don't enter into it if you're talking about the infinite banking concept per se. Now, yeah, once you get into the execution of it and you're actually designing a case for a specific person, then you'd be looking at numbers, sure. But there is no math when it comes to infinite banking per se. It's about control.
So without even looking at this real quick, I'm just going to bet he's going to compare it to an investment. Am I right?
They're so predictable. They're so predictable. Yeah. It's funny because we know all of their so-called arguments inside and out. We've heard them 1,000 times, but they don't even know the basics. They can't even define what the infinite banking concept is, right? These are supposedly experts, right?
So let's see this. I want to see where he starts comparing it to an investment. I want to do the math with him.
Yeah, yeah. Once I expose the fatal flaws within the infinite banking concept, I will share a strategy that actually delivers on the promise of infinite banking without the need of a bank or insurance company. Now, that I would be interested to see. That I would be very interested to see, because I will always grant, for the sake of argument, you can become your own banker without specially designed whole life insurance. It is absolutely possible. There are other vehicles you could use depending on what position you're in. So that I would be interested to see. I would be very interested to see that. And I want to give him credit because that shows at least that in some sense, he's at least somewhat able to make the distinction between the infinite banking concept and whole life insurance, which most people are not. Most people are not. There are no products to buy, and I will sell you nothing. You keep all the money. Here we go again. Again, he's acting like if I sell you something that's evil, right? If you buy a product, well, it's win-lose. It must be a win-lose proposition. If you spend your money to buy a product, you lose, and the person who sold you the product won. That's what he's saying. It's evil to sell things. It's evil to make profits. Everything in the economy is evil. This is communist logic right here. This is total 100% Marxism. Okay. It is not evil to sell people things. It is not evil to make a profit. It is not a win-lose proposition when I sell you a product and you buy it. That is a good thing. That is called commerce. Without that, the economy collapses and we all starve. Okay.
Yeah. I remember a claim I paid out. He was a deacon. I think he paid about $10,000 in over 2 years, and I handed his wife, I think it was 75,000, I want to say, after 2 years of that policy being enforced. I wrote it and paid out the claim. So is he saying that's evil? That they handed me like, you know, like I said, I think like 10 grand and I handed her 75. Is that evil?
Right. And it makes me suspicious when he's masquerading as, oh, I'm just objective. No, we all have biases. All of us. We're all biased. I love the infinite banking concept. I say that up front. I make money selling whole life insurance. I am not hiding it at all. I love it. I make no apologies for that. I'm proud of the fact that I sell this venerable old product that's protected so many and orphans from disaster. I have no problem with that. Okay. But don't pretend like, oh, I'm objective and unbiased and I'm not making money at all. Well, the fact that you advertise that tells me you have some ulterior motive. Okay, so what's your ulterior motive? Well, I don't know, but it's probably you make money taking assets under management or you make money from some alternative financial strategy. Because why don't you just be honest about it? Don't pretend to be Mother Teresa. Okay, you're not Mother Teresa. You're not here to help people. You are here to sell a product and make money, and there's nothing wrong with that. Just be honest about it. Be
Yeah.
honest about it.
If you were Mother Teresa, you'd be in an orphanage in India.
Right. Have you taken a vow of poverty? No, then why don't you stop being a hypocrite? Stop being a self-righteous Pharisee, and let's just have an honest, professional disagreement about a financial strategy and stop with the name calling and stop with the moral posturing. Okay. It's really irritating. We can have a professional disagreement. That's okay. Peter and I disagree on some things in the finance world. I
Sure.
don't call Peter evil because we have a professional disagreement about certain products. It's fine. Experts can have different opinions, and let's have a professional disagreement. We don't need to engage in name calling. We don't need to act like I'm morally good and you're morally evil because you have a different philosophy on finance. But that just tells me they don't have a strong argument. That's why they have to resort to name calling and moral
Well, look,
posturing because they don't have
look,
an argument.
it's these same guys, whether it be Dave Ramsey, Ken Fisher, this jabroni, like they all have the same thing. We're just gonna go bash somebody else, and you should do it our way. Then they turn around, or you do
Yeah.
it our
And
way.
look
Or
at the website right here in the same article that he's claiming I'm not here to make any money. Look here to the right. I think that's an advertisement, Peter. to the
right.
just to the right of the article. File your federal and state taxes online. Look, I could click on that. I'm pretty sure he's making money if I click on that. And then I can sign up for his email list. I'm pretty sure that's a way to sell me products too, right? No, he's trying to make money, clearly. And there's nothing wrong with that. Just
Right.
be honest about it, okay? Okay, so you're not running a charity. Let's just get that straight. Okay.
But
All right.
why must you bash something else? Why don't you go talk about good things? Why don't you go, take care of the American people that are being just being lied to.
Right. Instead of engaging in this Marxist envy that whenever you see somebody else making some money, you want to tear them down because you're envious of the fact that that other person made money. Right. Okay. You keep all the money. Well, that's not possible. Okay. That's not possible. No one's going to give you something for nothing. There's no free lunch. Right. Okay. There are two serious financial disasters built into the infinite banking concept. I will expose these flaws as we work through the math of how infinite banking really works and how you can do much better. Okay. What is infinite banking? All right. Now maybe he's actually going to define it. Okay. I got to give him credit. If he actually takes the time to define it, he's already doing better than probably 80% of the people who criticize infinite banking. If he actually takes the time to define it, even if he defines it wrong, if he at least takes the time to try and define it, he's already doing better than 80% of the critics, right? Okay. What is infinite banking? Infinite banking is a twist on the sinking fund. No, it's not. Sorry, you're wrong. Okay. Peter, do you know what the sinking fund is?
Yeah, to a certain degree. I'm just still trying to get past that sentence of how infinite banking is a sinking fund. That's really bad.
Yeah. I mean, if that were true, then yeah. Yeah, why would you do that? If you read Nelson Nash's book, Becoming Your Own Banker, which I'm assuming he has not read, he shows a scenario where you can buying a car several different ways. One of which is using a sinking fund. And a different way is using the infinite banking concept. And he contrasts the two. He contrasts, I think, 5 different ways of buying and owning a car, and shows how with the infinite banking concept, you come out way ahead. And the sinking fund is one of the ones that he contrasts it with. So no, it's not a twist on the sinking fund.
Hold on a
The
second,
sinking
Logan.
fund
You keep on
basically
talking.
just,
I'll go
yeah,
on.
the sinking fund, and I don't know if I can define it precisely, but it's basically saying you're putting money away to go and buy something. So if you're saving up to buy, thank you, Peter, for the book. Go to the automobile purchase section if you could, Peter. But if you're saving up to, let's say, buy a car and you're going to buy it with cash, and you start putting money away into a savings account, right, that you're then going to use to buy the car, that's basically a sinking fund. Okay. Sinking meaning you're going to use that money. So it's going to be spent at some point, right? No, that's not what the infinite banking concept is, because money you contribute to your whole life insurance policy never goes away. It keeps earning for you from now till the day you die, even if you spend it by way of a policy loan. And that's what he shows you in that example, how the money that you use to buy the car, if you flow it through your whole life insurance policy first, then you're able to earn on all that money. And you end up with, I think, like almost $1 million in that example, because of the way that you're able to earn on all that money that would have left. So that's money, that's now $1 million that's been recycled back into, yep, there it is. Yeah.
So it's part 3, how to start building your own banking system, and 5 methods of having use of an automobile over a 44-year period of time.
Can you show that chart again, Peter? Talk from your end so it'll show up on the. Yeah, if you're not
there
talking.
it is, and it's page, by the way, this is page 41.
Page 41, figure 1.
Right here it is again. Okay, you can get this on Amazon or other, I think you can get it right from the Nelson Nash Institute as well. Okay. Now, you know, the fact that he's talking about some video, if he actually wanted to do this the correct way, he would literally, I would,
he'd be quoting Becoming Your Own Banker by Nelson Nash or some other source. I can pick a random video on mutual funds and just set up some ridiculous caricature and take it down, right? So the idea that he thinks he's being objective because he's going to share one video on one proponent of infinite banking, what that tells me is you're probably cherry picking someone who is promoting infinite banking in the wrong way. It's probably what you're doing. So again, it's a straw man argument.
Yeah, I mean, I could pick, by the way, I could pick like Bernie Madoff if I wanted to, guy that, promoted investments back in the day, right?
Yeah. And speaking of experience and credentials, before Bernie Madoff got found out, Nobody had more experience or more pristine credentials than Bernie Madoff. I mean, that guy had credentials up the wazoo. The
And,
performance of his fund was phenomenal. There was no one more legit and credentialed than him. So this is one of the reasons why I don't, you have to trust your own brain. You can't put stock in someone's credentials or experience.
and he only had, what's interesting, and I actually was told this by a guy that actually worked like right there in New York, was he only had one bad year. And instead of just falling on his sword and actually saying, I had a bad year, he started doing some funky stuff. You know? Anyways, side note. So
Yeah.
you get a bad year. I've got it wrong on, look, there's been times where on indexed annuities I've picked the wrong index or whatever. You know what's funny? I own up to it. I say, hey, I picked the wrong one. People end up giving me more money. Huh. Because they like they want people that actually are going to tell them the truth and right, and they can trust. Anyways.
Right. The honesty, the humility. Okay. In a sinking fund, money is saved to fund the purchase of a big ticket item, say a vehicle. Infinite banking swaps out the bank deposit with the insurance company and uses a good story to convince you the insurance company has a better deal, plus you get life insurance. Okay, so again, this is not at all a precise definition of the infinite banking concept. Okay, so he is, as always, setting up a straw man. He's doing what they all do, misdefining infinite banking, whether knowingly or unknowingly. And I think it's a lack of ability to think conceptually. And so they can't get their head around something that's abstract, like infinite banking. So they latch onto something that's more concrete, like a sinking fund, which they can understand, but they're too superficial in their thinking to understand a deeper concept like infinite banking. And this is why he doesn't understand it. And this is why he attacks it. Okay. So no, that's not what the infinite banking concept is. So we're already dealing with a straw man argument. If all it were replacing a sinking fund with an insurance policy, I mean, I could see where that might make sense, but that's not the infinite banking concept. Okay, except that is not exactly true. The insurance company can no more give you a free ride than a perpetual motion machine gives free energy. Nothing works that way. True, there's no free lunch. It's all trade-offs. True, no one's giving you free lunch.
Yeah, we've never said
Except
that.
this guy, apparently, who is giving you something for free. He's going to give you an idea that requires no money from you, apparently. So, you know, apparently this guy can give you something for free, but nobody else can, right? Okay. Because my bias is against infinite banking, I will use screenshots from a video from Cashflow Hacking / Life 180 in Infinite Banking Proponent.
Oh, is he going after our buddy, Chris Kirkpatrick?
Yeah, and believe it or not, Chris Kirkpatrick is not a proponent of the infinite banking concept. So this guy clearly can't make distinctions. Chris Kirkpatrick loves whole life insurance.
Me too.
He's not an infinite banking guy. Chris Kirkpatrick is not a proponent of the infinite banking concept. Okay. So again, that's another strike against this guy. He clearly he's mischaracterizing infinite banking, doesn't define it properly. And the guy he's using it, who's supposedly a proponent of infinite banking, is not a proponent of infinite banking. Okay. Chris Kirkpatrick is a big fan of specially designed whole life insurance policies for a lot of different reasons. He's not an infinite banking guy. He's not.
Right.
So like I said, not surprisingly, the one video he's showing is from someone who is not a proponent of infinite banking.
That's why I was kind of surprised when I was like, wait. And by the way, he should not be. He picked the wrong guy to even if he's, you know, Chris Kirkpatrick does a great job. The guy's awesome. If you're out there watching this, Chris, you're the man.
Now I'm gonna get Chris back on my show. We'll talk about this. This will be awesome. I'm glad he mentioned Chris Kirkpatrick. Now I can get him back on my show and have Chris talk about it. This will be awesome.
Right.
Okay.
Yeah, I want to hear that one.
Okay. The promise of infinite banking is that a properly structured whole life insurance policy provides a safe place to save money so you can borrow from yourself at a future date to invest in income producing assets. Well, no, no, and no. You don't borrow from yourself. You borrow from the insurance company. When you take out a policy loan, you are not borrowing from yourself. You are borrowing from the insurance company. And that's the whole point. Your money is still earning for you in your policy. There'd be no point in borrowing from yourself. Now, again, people may use that terminology, that phraseology, but they're kind of using it in a loose conceptual sense. This guy clearly doesn't understand what those people actually mean. Okay. And at a future date to invest in income producing assets. Well, no, you can if you want. I mean, you can use policy loans to invest in income producing assets. And here's again more confusion. He's confusing what Chris Kirkpatrick is talking about with infinite banking. Chris Kirkpatrick does talk about what he calls cash flow hacking, which is not the same as infinite banking, saying you can use policy loans from whole life insurance policies to buy income producing assets like real estate. And that can be a great strategy. And that could be a subset of the infinite banking concept. Okay. But the example given in becoming your own banker, the example we were talking about is just buying a car. All you're doing is buying a car. You're not buying an income producing asset. You're just saying, as long as I'm going to make this purchase, as long as I'm going to buy this car, I'm going to do it in the most efficient, effective manner possible, which is using a policy loan from whole life insurance rather than using a sinking fund, rather than going to a conventional lender and financing it that way, right?
Right. Just like what I like to do with cash value life insurance policies, with loaning out the money after like a market correction. That's like that's not IBC per se. That's my derivative of it, right?
Yeah, it's a use case that it could
Yeah.
be a use case of infinite banking. So again, this guy cannot think conceptually. Again, most people who attack infinite banking lack the ability to think conceptually. They think at a very superficial surface level, and they can't make distinctions. So he's getting confused going after specific use cases of infinite banking because again, he has to latch onto something concrete, missing the bigger picture of I'm becoming my own banker and I'm running my cash flow through this much more efficient vehicle, a properly designed whole life insurance policy, rather than a bank account. Now, how I use that money is irrelevant, right? Use it in the manner that you see fit. Make the purchases and investments you were going to make anyway.
Right.
Just make them in the most efficient manner using your policy. That could be buying cash flowing real estate. So it could be buying income producing assets, like you said. It could be just letting it stay there and save, right?
Right.
It could be making a consumer purchase, like buying a car, buying a house to live in, making a down payment on a house, paying for college, right? It could be any number of things.
Right. And like you said, you're in control of it, right?
Right. Right.
I mean, my gosh. And if you don't even touch the money inside of it, what did we talk about before? At year 20, for every dollar, roughly at year 20, for every dollar you put in, the insurance company is going to match you dollar for dollar. I mean, come on. How could that be a bad thing?
Right. Right. Okay. All right. If the whole life insurance policy is structured properly, placed with an insurance company that pays interest even on funds you have borrowed out, okay, that has nothing to do with proper policy structure. This guy doesn't know what proper policy structure means. He probably doesn't know what paid up additions are. He probably doesn't know what base premium is. He probably doesn't know what blended PUAs versus standalone term riders are. He probably doesn't know about direct versus non-direct recognition. He probably has no clue about any of these concepts. He's just saying that apparently proper policy structure means they pay you interest on cash value, even if you've taken a policy loan against cash value. Well, that applies to every single company I work with does that. So according to this definition, no matter how I structure the policy, it's properly designed.
Yeah, I mean,
Every single company I work with, no matter how I structure the policy, if you have cash value and you take out a policy loan to borrow against cash value, you are still being paid interest and dividends on the full principal balance. So no, that has nothing to do with proper policy structure. That's baked into the cake. That's given. That's a given. That is a given. You can double dip by borrowing from yourself to buy income producing assets while at the same time still earning interest on the full value of the account in the whole life policy. This, in theory, supercharges your ability to grow wealth. I mean, in a rough manner of speaking, that's okay. I can accept that. Yeah, the idea is you are earning in the policy, and you're earning on the income producing asset that you use the policy to buy, right? So your money's now earning in two places at once.
But you're not borrowing from yourself.
Right. Your money's still safely in the policy.
Right. But you're borrowing, it's very important, you are borrowing insurance company money.
Right. Now let's see where it all goes wrong and usually leads to financial collapse. Well, that's a pretty bold statement. I know a lot of people are doing infinite banking, and I'm not aware of any of them that have suffered a financial collapse. Like, that's a pretty strong statement. He's not just saying that this is a suboptimal strategy. He's saying it leads to financial collapse. That's pretty bold. That's pretty bold. I don't think Nelson Nash suffered a financial collapse. He had 48. I think it was 48 whole life insurance policies in force when he died. That guy was doing infinite banking to the extreme. And he died a rich man, a very rich man. And he passed on a lot of money to his heirs. Yeah. He did just fine.
I'll reference George Sigurdsson up in Canada. He's amazing. His premiums, now some of his policies recently got paid up, but he talks about this publicly all the time. His premiums are $400,000 a year of whole life premiums. And in Canada, because it's a 50% tax rate, he has to make $800,000 a year just to pay his whole life premiums. And
yeah, Jason Lowe.
The only thing he regrets is not buying more.
That's always what I hear. I wish I had started this sooner. I wish I had taken out more. I wish I had not been afraid to pay a premium. I think it's Jason.
It's my biggest regret.
Yeah.
And I've been in this business over 22 years now, and it's my biggest regret.
Yep. Jason Lowe, the #1 infinite banking guy in Canada, I think he said publicly he pays $1.2 million in annual premiums into his policies on himself.
He's going to make 2.4 just to pay his premium.
Right. So he pays a $1.2 million premium and he immediately has $2.4 million available to him. Does that sound like a bad deal to you, Peter?
No.
Yeah, financial collapse. Okay, I see pretty much the opposite. The people who are doing infinite banking are doing quite well. Okay, so now, and again, I just want to reiterate, he has not properly defined the infinite banking concept. So it's dead on arrival. It's dead on arrival. It's a total straw man argument. There's no precise definition of the infinite banking concept here. All he says is it's a twist on the sinking fund where you replace the sinking fund with a life insurance policy. Well, that's not a very precise definition. So that's not even precise enough for me to take it down, but that's clearly wrong. So as always, it's a straw man argument. But let's get into all of his misconceptions anyway. Okay. Fatal flaws of infinite banking. Infinite banking versus the sinking fund. Okay. So he's not comparing it to an investment yet, Peter. He's comparing it to the sinking fund. So which will be easier because he's probably not going to say you're going to get a 12% return in your sinking fund, I assume. So here he's got a screenshot of Chris Kirkpatrick of Life 180. And this, by the way, this diagram he's showing is not unique to Chris, I don't think. The above screenshot of a Life 180 video is how the presenter views a sinking fund. Okay, in a sinking fund, you save money to handle large future purchases. For example, you may save a monthly amount in a sinking fund to replace your car. You then buy the car with cash. True, fair enough. In Nelson Nash's book, I don't think he calls it a sinking fund. I think he just says cash, the cash method, but it's basically the same thing.
Yeah.
The argument made in the Life 180 video is that you never get anywhere with a sinking fund. You deplete the fund when you pay cash for the car and replenish the sinking fund only to the previous level. That is a massive misunderstanding of the sinking fund. Okay. This might be a bit of a rabbit hole, but okay, whatever. I doubt that Chris Kirkpatrick is trying to precisely define what a sinking fund is in this video. He's probably trying to illustrate the mechanics of why taking out a policy loan is more advantageous than paying cash in a lot of cases, right? That's probably what he's trying to illustrate here, okay? So, and basically the argument is if you pay cash for something, you cannot earn on that money you paid. So if you pay $25,000 in cash for a car, you can no longer earn anything on that $25,000, right?
I just noticed something, Logan, not to cut you off.
Go ahead.
Do you see the Chris Kirkpatrick video, the title of it?
Yeah.
He's
You're talking
literally
about,
picked it. He's
he's
literally picked.
saying, yeah, he's saying it in here. If you can read it, he says in the Chris Kirkpatrick video,
Yeah.
right? There's the subtitle, and then there's the chapter title. The chapter title says, Infinite banking will not get you rich buying depreciating assets. Right?
So he's picking a video that's not exactly, like pro infinite banking. And this is like
Right.
his representation. I just realized that. I'm like, oh my gosh.
Chris Kirkpatrick is not a proponent of the infinite banking concept. So he's picking a video that is not promoting infinite
Oh my
banking.
God. Like
The,
you
the
gotta,
purpose of the video is to show you the limitations of infinite banking. Now, I'm assuming here because I haven't actually watched the video, but
no, I'm gonna go watch it after we get done now. I just can't believe you would be that dumb to do that.
right, right. I think what Chris Kirkpatrick is trying to illustrate is that if you use a policy loan from whole life insurance to buy something rather than pay cash, you are now still earning on that money in the policy. So you still have to give up the money in the sense that you have to finance that purchase using a policy loan, but your money is still earning for you inside the policy. Whereas if you had pay cash, you can't earn on that money anymore. It's all gone.
Right. No, I'm not picking on Chris at all. I'm just picking on this guy that he
Yeah,
literally did not exactly pick a. It comes to show how this is a. Yeah, this is not the video that you're gonna go. You're gonna go pick on infinite banking with a non-infinite banking video.
right, right, right. And of course, he hasn't defined what the infinite banking concept is. It's just this ridiculous straw man argument. Okay. Um, the money in a sinking fund earns interest. True. Okay. It could. When you use the money to pay cash for a car, what infinite banking calls borrowing from yourself, you pay the sinking fund back with interest. Okay, I'm not sure what he's talking about here. That is how you keep up with inflation. What does inflation have to do with this? I don't understand. The sinking fund is always growing via interest from the savings account or from your car payments to your vehicle sinking fund. This is a confused mess. I have no idea what he's trying to say here. This is just garbled. Let me read this paragraph again, see if you can make sense of it. The money in a sinking fund earns interest. When you use the money to pay cash for a car, what infinite banking calls borrowing from yourself, you pay the sinking fund back with interest. That is how you keep up with inflation. The sinking fund is always growing via interest from a savings account or from your car payments to your vehicle sinking fund. So, okay, so you're paying yourself back with interest. So I guess what he's saying is after you use the sinking fund to buy a car, then you keep making payments into your sinking fund with interest. Okay, but you're still having to come up with the payments, right?
Yeah.
You're still having to come out of pocket. I don't see there's no benefit to that because you still have to come up with the money. Whereas when you use a policy loan from the infinite banking concept, the insurance company is kicking in interest and dividends on the full principal balance. And when you go and buy the car, your sinking fund is reduced to zero. And then you have to build it up again. Whereas when you take out a policy loan from your whole life insurance policy to buy the car, your cash value is not reduced at all. You keep earning on the full principal balance.
And how about when you get like you like to say, which I've stolen from you, by the way, a well-seasoned whole life policy,
Yep.
right?
Mm-hmm.
There you go. Now we're talking about it, right? So,
And in this example, in Nelson Nash's example in the book, you stop making contributions to your policy. So you contribute $5,000 a year into the policy for 7 years. After that, you make zero contributions in terms of premium to the policy. And then you take out policy loans to buy the car. You end up buying, I think, one car every 5 years. So you contributed $35,000 to the policy. You bought 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 cars. So one every 5 years, roughly. There's either one or one, maybe one every 4 years. So you contributed $35,000 to the policy. You bought one car every 4 years. And at the end of 50 years, you have almost $1 million in your policy. Because that money kept earning for you while you were using the money. You kept recycling that money back through your personal economy, okay? Through this process of taking out policy loans and paying them back, okay? Now, in fairness, you're not making additional premium payments, but you are making policy loan repayments. But
Right.
that's no different from if you were to buy the car any other way. You'd still have to do that. Either you pay cash or you take out a loan and make payments to the lender, but those are payments you are going to make anyway, right? So that's a wash. No matter which way you do it, you're going to have to make those car payments, okay? But by using a policy loan from your whole life insurance policy, now what happens is all that money is earning for you. The money you spent on the car keeps earning for you. So you end up with $964,000, okay?
Yeah.
You take, and then guess what? You take $50,000 a year in retirement income from that policy for, let's see, 10 years, maybe 12 years. And your cash value goes up to over $1 million, despite the fact that you took income out of the policy.
Yep.
Thanks to the power of uninterrupted compound interest. So that seems to me to be a little bit better than a sinking fund, right?
Yeah. Does any sinking fund have a leveraged death benefit?
Yeah. Does it have long-term care protection?
Yeah. Like,
Does the
I
money
can't
keep
wait.
earning for you while you're using it?
And I can't wait till you get to the next part here. I'm already seeing the title and I'm like, here we go.
All right. All right.
I'm chomping at the bit to get at this one because this one's my pet peeve right here.
It also happens to be what infinite banking conveniently forgets for the sinking fund and has excellent recall when applied to their life insurance product. Okay, he's not being very cogent in how he explains this at all. It's bizarre mess. I'm trying to understand what he's saying, but he's making a mess of it. Here we go. Now this sounds. Let me tell you. Does this sound like objective financial advice, Peter? Infinite banking's rate of return sucks. Part one. Does that sound like a professional, financial opinion, someone to be taken seriously?
No.
Remember, this
Absolutely.
guy's running a charitable organization. Remember, he's not
Yeah.
trying to make money.
He's Mother Teresa. Yep.
He's just
I
here to
almost
help
forgot.
you. Okay.
Oh.
What is that old saying? Figures don't lie, but liars figure. Okay. And then he's showing how that I would like to go through this illustration with Chris Kirkpatrick because I bet it's pretty phenomenal policy. Okay. Anyway. Well, I'm not calling anyone a liar. Yes, you are. Okay, stop with this. You are very clearly calling someone a liar. All right. So stop the moral posturing. You are calling someone a liar. Period. Well, I'm not calling anyone a liar. Yes, you are. I
And
am
by the
calling.
way, real quick, do you notice what years he's got arrows pointing at?
Mhm.
It's not exactly the well-seasoned part of the policy, is it?
Yeah, yeah. And notice how he's ignoring the death benefit, right? He's saying, "Oh no, you pay in $200,000 in premium, and you only have $185,000 in cash value." Conveniently ignoring that, yeah, but you also have a nearly $3 million permanent death benefit. I guess he wants to leave that out of the equation.
And you still,
Okay.
by the way, he puts in 380 and he's got 436 in cash value and a $3.3 million death benefit. I'm good with that. Right? I do the math right? Yeah. I'm good with that. Let's go to I want to see year 20 on that. I guarantee at year 20, that thing is going to pop.
Yep, yep. And the fact that all of these numbers, if you take out a policy loan, these numbers don't change at all. Your entire principal balance keeps earning for you. When you take money out of your sinking fund and go and pay the car, your money is gone. None of it's earning. It permanently left your personal economy. Kiss it goodbye. You'll never see it again. Whereas here, you can use all the cash value via a policy loan. Meanwhile, the full principal balance keeps earning for you. You didn't take anything out of it, right? That's why no, it's not a twist on the sinking fund. There's no sinking here. It keeps going up even while you're using it. we're kind of getting towards the end of our time. I could go on forever on this, but let's go a little further since you're
Yeah.
excited on this one. Well, I'm not calling anyone a liar. Yes, you are. I am calling the math into question, however. In the video, we hear our first excited brag. See the $22,097 highlighted. That, we are told, is the increase in our cash value in year 2. But let's dig a bit here. The real brag should be that you contributed $220,000 to the infinite banking policy and still only have cash value of $207,728, a loss of $12,270 up to this point.
There's no loss.
No, you didn't lose anything. He's ignoring the death benefit, right? You have a nearly $3 million death benefit. You just leveraged $220,000 into a permanent, guaranteed $3 million tax-free death benefit.
You over 10x your money instantly.
Yeah, that's phenomenal. That's phenomenal. It is a self-completing plan to save $3 million. Okay, you will get there.
As I ask people all the time, do you know of anything else in the world that can do what I just described?
Yeah. Yeah.
Go do that with a mutual fund or an ETF. And listen, people buy them from me all the time. If you give me 220, unless I'm like, man, I'm riding Bitcoin pretty hard, I'm gonna hodl the whole way, 220 to equal 3 million. Okay.
Yeah. So no, there's no loss. There is a loss of liquidity. Yes. Just like if you take $500,000 and buy a $500,000 house for cash, you lost liquidity. Yes. Your $500,000 is no longer liquid, but you didn't lose any money. You still have a $500,000 asset. Here, you haven't taken a loss, you've gained. You leverage your $220,000 into a $3 million death benefit. Okay. So no, it's not a loss. And then he says, but the $22,097 highlighted in the video comes from the non-guaranteed columns. The guaranteed amount is less. Okay, true. We're assuming this company pays dividends. This company has paid dividends every single year straight for over 100 years. And even if they don't pay dividends, it still goes up in value. It's just a matter of how much. Okay.
And by the way, I'm pretty sure this is a Lafayette policy.
Yeah.
I know for a fact.
So we're projecting out a low dividend scale. It's a very conservative projection. Okay. We're not assuming the S&P 500 is anything. Who knows what that's going to do? So the non-guaranteed is still incredibly conservative and incredibly likely. Okay. But even if they don't pay a dividend, which has never happened, you're still being paid interest. So it's still going up. It's just going up less.
Yeah. And if which I'm 99% sure it is Lafayette, they're like, I call them the Scrooge McDuck of insurance companies. They got so much cash laying around. It's ridiculous. So there.
Yep. You still have a loss regardless of what column of the projection you use. No, there is no loss. You have not lost anything. Okay. It's less liquid now. Yes, you had to give up some liquidity, which happens almost any time you're making a financial transaction. Okay. You're increasing the value of your estate. Okay. But there's always a trade-off. There's no free lunch. What did you give up? You gave up some liquidity in the early years, and you'll get that liquidity back in spades in the later years. So there's no loss. No, there's no loss. And to your point, Peter, like you're saying, if you just look at the first 2 years, I mean, come on, that's ridiculous. Any financial product, you should not be looking at it over just 2 years. You should be looking at it over a long time frame. Duh.
This is not a short-term savings account. This is a long-term savings vehicle, okay? Right?
Right.
Look at year 10. That's where me and you typically start. He puts in 380. He's got 430, 436. I'm good with that.
Yep.
Just look, look at that at year 20 and then look at that at year 30. That thing is balling.
Right.
As you say, well seasoned.
Right. Of course, you can borrow some of your own money if you want. More on that later. First, we need to talk about, and then it says infinite banking's rate of return sucks, part 2. So part 1, I don't even see an actual negative here, right? All he's doing is he's pointing out that there is a loss of liquidity in the early years, which everybody knows, and we don't dance around that. But it's not you didn't lose. He's acting like, oh, you lost $12,000. No, you didn't. You have a $3 million death benefit. And as you pay premiums in the policy, your cash value will catch up to and exceed what you paid into the policy. And it's guaranteed to happen. Okay. either when you die or while you're alive, right? So no, you haven't demonstrated anything other than that you're just myopically focused on the first 2 years of the policy. Well, if you're myopically focused on only the cash value and only the first 2 years in a whole life policy, then of course it's going to look bad. But why would you look at it that way? That doesn't make any sense.
That's
Are you
not what
telling me you make financial decisions based on what's going to happen only over the next 2 years and that's it? Forget about everything else?
and I will, even though he tends to be more IUL than whole life, but I'll quote David McKnight. David McKnight talks all the time about when you buy a cash value life insurance policy, it's like a marriage. You're in this for the long run. And that's very important. This is not some short-term, a couple year deal, right?
Right. So, and to answer this author's point, right? He's like, oh, he's saying you take a loss in the first 2 years. Well, if you put money into, let's say, a savings account where there was some loss of liquidity, and then 2 years later you died, yeah, you suffered a loss. Here, if 2 years in you die, a $3 million death benefit pays out. And there's no taxes on any of that. Is that a loss? Look, Peter, it's very simple. At any point in time, you're either going to be dead or you're going to be alive, one or the other. Okay. If you're alive, that cash value keeps growing. It's going to exceed what you pay in. It's going to get super robust and efficient, and it's going to give you way more than what you put into it. Or you die, and then that leveraged death benefit pays out. But in either scenario, you're always coming out ahead. So no, there's no loss. Okay, there's a loss of liquidity. Yes, just like with any purchase that you make, you're going to give up something. There's going to be some trade-off. So you have a short-term loss of liquidity, and in exchange, you get massive long-term gains with no taxes and no market risk, permanent death benefit protection, long-term care protection, legacy planning, plus the policy loan feature.
And my favorite, you have a non-correlated asset class. So when everything else is crashing, your whole life, your infinite banking strategy will be sitting there. You can access that money and take advantage of every single government, Wall Street, and bank screw up for the rest of your life. There's nothing else that can do that, right?
Yep. Okay, well, man, I could go on forever. We'll keep going with this series. I'm trying to keep my videos a little shorter, but it's difficult. I want to go on forever, but this has been fun, and this is it's kind of the same tired old tripe. Unfortunately, there were he said a few different things, so I'll give him credit. There were a few things that, like, he's comparing it to a sinking fund, whereas most people compare it to an investment. He actually took the time to try and define what the infinite banking concept is and whiffed completely, but at least he tried to define it, right? So I think, like most critics, this guy's thinking is just too superficial. He can't see the abstract concept, and he's latching onto something concrete because he can't think beyond that, and so he's missing the point. And of course, he's picking a non-infinite banking proponent.
Oh my gosh! I so want to, Chris Kirkpatrick. If you're watch this later
we'll
on,
get him on the show. We'll
get on. Yeah, get me on too. I just want to hear this. But yes, I want to hear his rebuttal because, like, he's gonna be like, "What the heck is going on here?" Like,
I don't think Chris will be surprised in the slightest. He deals with this all the time. He'll be kind of like rolling his eyes, like, okay, here we go again. How many times do we have to have this silly little discussion? Right?
You could have picked any video. Just, gosh, it's not even the guy literally with the title. This,
right?
Just stunning.
I should maybe include a link to some of Chris Kirkpatrick's. He's not anti-infinite banking, but he has some videos where he's kind of like questioning the infinite banking concept in an intelligent way, because Chris Kirkpatrick loves whole life insurance. And so, but to say that Chris Kirkpatrick is a proponent of infinite banking is ridiculous. He's a proponent of whole life insurance. That's what he's a proponent of.
Yeah, absolutely.
Okay, Peter. Well, this is the first in the series. This has been fun. We'll move on to the next one, and I'll see if we can get Chris on the show. I know he's got a lot going on, but I would love to get him on the show to talk about this. That'll be fun.
Maybe we can get him. Think we could get him for part 2 of this?
I don't know if we can get him that quickly, but I'm optimistic we can get him on the show to talk about it. But he'll probably look at it and be like, this isn't even worth my time to respond to. Like, I don't even want to give this guy any airtime is probably what he's going to say.
The wealthy accountant.
He's like, I'm not even going to dignify this with a response. Like, come on. And I would understand. I'd be like, I understand. I understand.
But let me just say one last thing though. The part that I think we're joking about it now, and that's all you can do, right? But the thing that bothers me is that there'll be people out there, the American public, that actually listens to this, what this guy posted, and actually take it as like solid advice.
Mhm.
And it, it could really negatively impact someone's future, because what he's saying, ladies and gentlemen, I'm a top of the table $1 Million Roundtable member ranked in the top 1%. What I can tell you real quick is what this guy is telling you is absolute garbage. And I'm sorry, it is not based on mathematical, scientific, or economic facts. It absolutely is not. And that's all I want to say, because it really does kind of tick me off too, that people can sit there and just lie.
Right. I think people who are reading this with an honest mind will, it always comes back to the same thing. They'll be like, well, you haven't even asked, let alone answered the important questions. Someone who's reading this with an honest mind will say, wait a minute, you haven't even really defined what the infinite banking concept is. Your definition of what it supposedly is too vague to mean anything. So let me try and understand what the infinite banking concept actually is first, and then I can decide if I'm for or against it, if it makes sense for me or not, right? And I think people will also see that his moral posturing and his ridiculous claim that I'm not here to make money is hypocritical and suspicious, right? I don't hide the fact that I love the infinite banking concept and I run a business doing it. I believe in it. I put my money where my mouth is, right? I've never understood when people are like hawking an investment and they say, well, I'm not investing in it. That will be a conflict of interest. I'm like, wait a minute. If this investment is so great, why aren't you invested in it?
Right?
Why should I believe you? I want to see you have real skin in the game. If you believe in this investment, I want to see that you have substantial amounts of money riding on that investment. And then at least you wouldn't be a hypocrite, right? Like maybe the investment doesn't do well, but at least you're a believer. Like you're acting with integrity, you're being honest, you believe in it, and you're acting in that way, right? So people who real proponents of infinite banking, who sell whole life insurance and who have large whole life insurance policies themselves, you can call them a lot of things, but they are not hypocrites. They are believers. And that's why people follow them. Because when you are a true believer, you are not a salesperson, right?
No.
Whereas this guy, he's clearly selling something. He's got banner ads on his site. He's trying to make money, but he claims not to be in the same sentence. Well, come on, that's ridiculous. Okay. Why don't you just be honest about the fact that you're trying to make money like everybody else?
Nothing is better about cash value life insurance than you get your statement and the next year it's higher than the year before.
No matter what. No matter what.
And as you said before, I just love it. I'm gonna keep on saying it. Well seasoned. You gotta give it some time, guys. But even the stuff, we said this in a prior video, even the whole life that is not structured as well as it should be, you give it enough time, you season it enough, still works.
Absolutely. All right. Well, this is part one. We'll look forward to part two. We'll see if we can get our friend Chris Kirkpatrick on the show at some point. That'll be a lot of fun.
Let's get him on. All right. Thanks, Logan.
All right. Thanks, Peter. Good talking to you as always. Looking forward to the next one.
God bless.
Godspeed, as Peter would say.